Good morning, friends. Today we are going to discuss about FCRA, that is the Foreign Contribution Regulation Act, because the government is intending to provide more teeth to this legislation. So, what is FCRA? You have been seeing it in news that the government is making actually proposing amendments to uh, enhance the scope of FCRA so that its ambit can be increased and it can be made more effective. So first of all, let's see what is FCRA. FCRA is actually uh, a law that regulates foreign funds. Any money coming to India from outside our country is regulated in terms of reviewing its purpose, its intention, so that it may not be counterproductive or uh, it may not adversely affect India's internal security. So when we're talking about internal security, it automatically covers territorial integrity and even economic security. Okay, so any fund flowing from outside India to our country, this legislation checks the intention of that flow of fund, and if the government thinks, if the Ministry of Home Affairs thinks that the intention of this fund is clear, only then the fund can flow from outside to India. So let us see what is FCRA. FCRA regulates foreign donations, like we've discussed before, and ensures that such contributions do not adversely affect internal security. Like I said, internal security would also comprise of economic security. Economic security, as in, because we have seen that some, let me tell you with an example, because we saw that during the construction of Kudankulam nuclear plant, some NGOs were actively involved in sabotaging that construction by creating um, a parallel narrative that such a nuclear plant would be would not be in the interest of local public, and they were creating the seeds of discontent among the local people again and pushing them to protest against the government of India. So uh, this uh, context of economic security is already imbibed in this internal security. So, internal security is a very broad term where the government can act and enforce any security measures with respect to any social, economic, political, or religious uh, institution. Okay, so it was enacted in 1976. It was recently amended in 2010. Now it is applicable to all associations. When we are talking about all associations, it also automatically applies to any company that is registered in India. So let's assume that Reliance Corporation or Reliance Industries is uh, receiving some donations from outside the country. FCRA regulations will also apply to that transaction. Okay, so all associations, groups, and NGOs which intend to receive foreign donations are covered under the ambit of FCRA. So when any NGO or any such association intends to register itself with the FCRA, it is registered for a period of 5 years initially, and then such registration is renewed subsequently if the NGO or the association complies with all the norms. So these registered organizations or associations under the FCRA can receive social, educational, religious, economic, and funds for social, educational, religious, economic, and cultural purposes. Like you file an ITR or the income tax return, they also have to file annual returns regarding the income and expenditure of from the funds that they have received from outside. So, and you must know that in 2015, Ministry of Home Affairs also notified new rules that these NGOs have to give an undertaking, like they have to give a written undertaking that they will not accept foreign donations which may affect the sovereignty and integrity of India, or uh, it may impact any friendly relations with any foreign state, or disrupt any communal harmony in India. So, this undertaking by the NGOs created a fury amongst the NGOs at that time also. So, similarly, when the Home Ministry is pursuing another amendment, this, these NGOs are again on the job to protest against such measures. We will see what are these amendments in a short while. Okay. Now let's see who cannot receive foreign donations, like members of the legislature and members of political parties. Here you should know that members of legislature like MPs or MLAs cannot receive the fund, and members of political parties, not political parties per se, because political parties are allowed to receive foreign donations. This is also a new provision in the Home Ministry, rather the Government of India amended the provisions of FCRA in 2017 to allow foreign donations to flow in political parties. Earlier, they were also not eligible to receive foreign funding. Okay, so members of legislature and members of political parties, in as an individual, they cannot receive foreign donations. Government officials, judges, and media people, they also cannot receive foreign donations. So FCRA is prohibiting these categories of people from receiving foreign donations. Like I said earlier, in 2017, Home Ministry through the Finance Bill route. The Finance Bill is the budget route. They amended the 1976 FCRA and paved the way for political parties to receive funds from Indian subsidiary of a foreign company. If a foreign company is a subsidiary of an if of if an Indian company is a subsidiary of a foreign company, uh, like Amazon India. Okay, so these political parties can receive foreign funds from Amazon India and not from the original Amazon company. Okay, and they can also receive funds from a foreign company in case an Indian holds more than 50% stake in that company. So if an Indian is holding more than 50% stake in that foreign company, it will be a company owned by an Indian. Okay, so the entire purpose of this uh, rule is to make sure that the company is held by an Indian citizen. So when this amendment was made in the FCRA, the Association for Democratic Reforms, there, because there was a public outcry that the government is intending to retrospectively amend and legalize the foreign donations that the mainstream opposition party and the ruling party of the country has received in the last few years, because there was a controversy in which Vedanta Group of UK made donations to both BJP and Congress in the last Lok Sabha elections and the 2019 Lok Sabha elections. So it was alleged that the government is trying to legalize its foreign funding by bringing this amendment. This group ADR moved to the Delhi High Court against the government, against the UPA government in 2013, and then when it moved to the Supreme Court, this ADR moved to the Supreme Court. The government changed the terms of FCRA retrospectively. What do you mean by the term retrospectively? It means that the government changed the law from a back date. Like if in case of civil laws, you can change the impact of a law from a back date. Like in this case, when the government is changing the law in 2017, it is not only legalizing the future transactions, it has also legalized the previous transactions. Let's say from the year 1990, all the transactions that happened between 1990 and 2017, they are automatically legalized under this law. I'm just taking an example. 1990 is not the actual year of retrospective amendment. I'm just giving you an example of the year. Okay, so there was a public outcry over this case where people alleged that these political parties have um, washed their sins of foreign funding by this amendment, because none of the political parties in the parliament opposed this bill. Okay, so how else can one receive foreign funding? The other way to receive foreign contributions is by applying prior permission. In case, so actually there is a procedure under which uh, the government bans or prohibits an NGO from receiving foreign contribution. Firstly, you register your NGO with the government under FCRA. If the government finds that there is something fishy about foreign donations that you're receiving, it will put you under a watch list. In that case, if you're put under a watch list, the government or the home ministry will uh, see the transactions that are happening under your NGO with your foreign partners. If they find that there is something more fishy and there is some evidence against your actions, or the funds that you are receiving are prejudicial to the interests of the country, they will put you into the prior permission category. So the first category is, you are when you're registered, that's the step A. In case of violation, you are put under watch list, that is the step B. And in step C, you are put under prior permission category. If your NGO gets into a prior permission category, you can only receive a specific amount from the specific donor, that which resides outside the country, to carry out only specific activities or projects. Let's say I am an NGO which has which has reached the third stage, that is the prior permission stage, and I want to build a school in uh, say Panipat of Haryana. Okay, so I will, if I my NGO is put under prior permission category, I will have to submit that I am receiving uh, uh, let's say for example 100 crores of foreign donation from um, Mr. X that lives in Florida, United States, to carry out this project of making a school in Sonipat or Panipat of Haryana, whatever the city that I mentioned earlier. So I will have to declare every step that uh, for the project, from starting from the amount, the 100 crore rupees, the specific donor, the person who is living outside and who is willing to donate me, and the project and activities, that is the school that I'm making in this region. I will have to apply for permission from the government to carry this project. Okay, so this prior permission is the third stage before an NGO or an association is prohibited or its license is cancelled. That will be the last stage, that is the fourth stage. There is also another condition in the prior to apply for a project under the prior permission category, that your association should be registered under the Societies Registration Act, the Indian Trusts Act, or Section 25 of the Companies Act 1956. Now, what is this Section 25? This Section 25 is for the not for profit companies. Um, the, what are not-for-profit companies, like any organization that works not for the profit but for the welfare of the society. So these companies are not-for-profit companies under the Companies Act 1956. So these are the conditions to if where an association can fall under the prior permission category. If none of these conditions are fulfilled, the association is automatically barred, or the license of that association is cancelled. That is, the association jumps from the second to the fourth or the final category directly without having any resort of the prior permission category. So when is the registration suspended or cancelled? If MHA thinks, that is Home Ministry thinks, that there is any adverse input. Now who will provide this adverse input? The institutions or law enforcement agencies under the Home Ministry, such as Intelligence Bureau or even Directorate of Revenue Intelligence, that is under Ministry of Finance. These intelligence agencies and the law enforcement agencies under the MHA and several other ministries give regular input to the Home Ministry and convey that some transactions or these particular transactions are not in the interest of the country. So if such an input is received, the Home Ministry can suspend the license of the association for 180 days, that is 6 months initially, until a permanent decision is taken on this suspension. No fresh donation can be made to that association, and that concerned association cannot utilize more than the 25% of funds from the designated bank account without permission of the Home Ministry. And you should know that these associations are obliged to open a bank account with a nationalized or a private Bank of India. So the Home Ministry regulates that bank account, and in case of suspension for this period of 6 months, the association cannot receive any fresh donation from outside, and the amount that is available in that bank account, let's say 100 crores, the association cannot utilize more than 25%, that is in our case 25 crores, without the permission of MHA. It can utilize even more than that, but for that you have to take the permission of Home Ministry. Home Ministry can also cancel the registration of an organization which will not be eligible for registration or for grant of prior permission. So once your registration is cancelled, that is the fourth step is the last step is invoked, that is the cancellation of the registration. You cannot go back to the third stage, that is the prior permission stage, for a period of 3 years from the date of cancellation. So you will have to stay stuck at the fourth stage for a period of 3 years until or unless your the adverse inputs or the actions of the MHA, uh, or at least, or I mean, MHA does not find any evidence against you for a period of 3 years. So now we have seen such uh, organizations like Compassion International, Ford Foundation, World Movement on Democracy, and many others. Recently, the Home Ministry also put rather cancelled the registration of uh, the FCRA registration of many Christian NGOs who were found to be involved in religious conversion purposes. Okay, so now let's see what are the recent amendments which are proposed by the Home Ministry. The first amendment, that is the most controversial, is it has made the Aadhaar document a mandatory identification for all the office bearers, directors, and key functionaries of an NGO or an association which is receiving foreign donations. So recently the director of Oxfam India, criticized the government for making this mandatory, for making this document mandatory for the key personnel of the NGOs, because they are saying that it is against the Aadhaar judgment of Supreme Court, and it is against their privacy, and the government wants to establish a surveillance state and all that. Such arguments were made by the NGOs and their key functionaries against the government. Now, why the government is doing it? The government is saying that we want to enhance transparency and accountability, so that the genuine NGOs who are really working for the welfare of society can be filtered out from those NGOs who have an ulterior motive against the Indian state. So that is why the government is making this argument that we want to facilitate the genuine NGOs who are working for the welfare of society. So let's see a little bit of provisions. What are the provisions that this amendment is talking about? First is, it is excluding public servants and corporations owned or controlled by the government from, it is including, actually it is including public servants and corporations owned and controlled by the government from the list of entities who are not eligible to receive foreign donations. We read about this list. Let me show you the list. The members of legislature, the members of political parties, government officials, judges, media persons who are prohibited from receiving any foreign contribution. The government is adding another term, another group, that is the public servants in that category, or any corporation owned or controlled by the government. Let's say the BSNL, which is owned and controlled by the government, they cannot receive foreign donations under the FCRA Act. Okay, so this amendment is being enforced by this section clause C of subsection 1 or of section 3. This is the the legal terminology. The government is amending this clause so that public servant can be added to the category of people who are ineligible to receive foreign funding. The bill is also proposing that 20% of the total foreign funds received could be defrayed for administrative expenses. So, actually, when you are receiving donation from outside, like say you received 100 rupees from USA to construct a school in Haryana. Okay, so at present, out of those 100 rupees, you will obviously the NGO that is present on the ground will incur administrative expenses such as the salaries, the other working capital requirements and all that. So out of that 100 rupees, only 50 rupees can be uh, at present. I'm talking about the present. Only 50%, that is 50 rupees, will be able to, the NGO will be able to utilized for administrative expense purposes. But the government is proposing that the limit of this uh, exemption, or the uh, or the exemption that is provided for administrative expenses should be brought lower down to the limit of 20%. So now if you are receiving 100 rupees to construct a school, the administrative expenses out of those 100 rupees should not be more than 20%, and the 80% of the value of foreign funds should be utilized for the purpose of the project that you are for the purpose of the project that you are indulging into. Okay, so it is uh, this is being done because these NGOs were allegedly routing the money received and in the name of administrative expenses to fund other works or activities which were not in the interest of Indian nation. So if the government is uh, limiting, if the government is bringing down this administrative expenses, they will have little money left in their pockets to fund activities or such works which are not good for the internal security of India. So this was the topic of today, that is the FCRA. We will come next time with another topic, and I hope that you can also download this entire PDF from the description below. We'll come tomorrow with a new topic. Until then, goodbye. Thank you.